What's going on, guys? My name is Nick, and if you're new here, welcome to the channel. So I recently posted a video revealing my entire $33,000 stock market investing portfolio, and by the way, it's already gone up a few $100s in the past week alone since I posted the video, so if you guys haven't seen it, definitely check it out. But of course, this is the follow-up video to discuss exactly how I make over $62 in passive dividend income every single month from that $30,000 invested. Not only because dividends are literally the hottest investing topic of 2019, but I wanted to make this video just like the last one to be completely transparent with you guys and give back because you've been supporting me so much on this channel by smashing the like button. Now this video is going to be all about dividends. I'm going to be first talking about how I select my dividend stocks and then actually getting into my portfolio, showing you updated screenshots of all of my dividend yields on cost and all of the passive income that I receive from these dividends, and then summing all of that up for my entire portfolio to give me $62 per month of passive income. This should actually be a very interesting video for you guys if you're wanting to maximize your passive income streams and eventually reach financial freedom, because one of the best ways to do that is through, you guessed it, dividend investing. Without a word of exaggeration, if you pick the right companies that pay dividends, you can simply sit back, relax, and let those cash dividend payments fill up your brokerage account to be able to pay off all of your life's expenses. And this is the truest form of passive income, which is why I love it so much. And if you do enjoy this video, I would really appreciate it if you could drop a like to support my channel. It really helps me out. And if you are new here, definitely consider subscribing for more weekly videos just like this. And so with that said, let's jump right into the video. All right, now before we get into my passive income from each dividend stock in my portfolio, I want to show you guys exactly how I pick my dividend stocks, because I know it's something that new investors often wonder about. Many of the companies that I select are very well-known blue chip companies that have been around for a long time, and that is the first key to dividend investing. Now, if your investing goals are anything like mine, it's to produce long-term wealth through long-lasting dividend passive income. And that's why I pick companies that are going to be around for the long term and actually have a track record of being around for a while. I don't want to pick speculative and sketchy companies with extremely high dividend yields, because that really isn't sustainable and it won't last me my entire lifetime. Now, with that being said, the first thing that I look at when choosing a dividend stock is actually the dividend yield, and I'll compare it to the 10-year history of that same dividend stock. This might be intuitive to most of you, but there are actually two reasons why I do this. Now, the first reason is to make sure that I'm getting a decent yield for the amount of money that I'm investing in that company. This is because I know the alternative is to put my money into a high interest savings account where I could get over 2% interest totally risk-free. So if I am buying a dividend stock, it should generally have a yield above this threshold, and you would generally consider this the initial screening. Now, the second reason why I check the dividend yield and compare it to the history of the dividend yield is to make sure that the stock isn't too overvalued when compared to the historical dividend yield. Sometimes you'll find that even though a company is increasing its dividend year over year, it doesn't actually catch up to the share price appreciation, and that means that the dividend yield is going down over time. Now, as you guys probably already know, I like to buy companies that are on sale by taking a value investing approach, and this also means that the dividend yield is going to be increasing as the share price drops. So this is a common misconception for new investors, but it's actually presenting a great buying opportunity because then you can lock in a much higher yield when the stock price drops. Now, the next item that I look at whenever trying to figure out which dividend stock to pick is actually the dividend payout ratio. The dividend payout ratio is probably the absolute most important metric to look at when considering a dividend stock, and that's because it tells you how safe that dividend really is. And it can be calculated by dividing the total annual dividend payments of the company by the total annual earnings per share. All you need to know is that high dividend payout ratios mean that the company is extending itself financially just to be able to pay that dividend. And if the payout ratio is above 100%, then the company actually can't afford that dividend and they're paying it out of savings. So I like to consider companies that have a dividend payout ratio below 60%, and that means it allows the company flexibility to be able to pay that dividend even when the earnings decrease by 40%. So you can only imagine how safe a dividend stock with a payout ratio below 60% would be going into a recession. Now, the final item that I like to look at when analyzing a dividend stock is the dividend growth rate, and I'll only consider companies with a growth rate above 5% per year. As you all know, I really love bank stocks because they have super high dividend yields, but they also manage to be able to increase their dividends at high single-digit rates every single year. Now, on the other hand, when you start venturing into companies with very low dividend yields, but very high earnings growth rates, like technology companies, you'll find that their dividends increase very, very quickly at a high growth rate, being generally in the double digits. So really, all you need to know is that there is a trade-off between the dividend yield and the dividend growth rate, and the growth rate is generally going to be higher if the dividend yield is lower. So I'll still consider a dividend stock with a much lower yield if it does have that explosive growth over time, because I know that my yield on cost is going to increase very quickly. Finally, the last important factor that I like to consider in choosing a dividend stock is the consistency of the management in paying that dividend. Like I've mentioned before, it's very important to find a company that's been paying its dividend for many years at a time, and I'll generally consider companies that have been paying and increasing their dividends consistently for at least 10 years. So overall, the 4 factors that I like to consider are the dividend yield, the dividend payout ratio, the dividend growth rate, and the dividend consistency over time. And now that brings me into my portfolio where I talk about my passive income from each dividend stock. Alright guys, so as I take you through all of the dividend positions in my portfolio, we're going to be taking a purely dividend focused view of my portfolio, unlike the last video where I went through all of my cost basis, about the company, etc. So if you haven't watched that already, definitely check it out. So coming in with number 1, we actually have the largest dividend payer in my Questrade portfolio, and that is the Bank of Nova Scotia stock, ticker symbol BNS.TO. As I've said before, I really love Canadian bank stocks for their great dividend yields and their history for paying dividends, so let's calculate my yield on cost. Currently, I own 65 shares of Bank of Nova Scotia stock at an average cost basis of $69.84 Canadian per share, while the company currently pays a forward dividend of 87 cents per share every 3 months. So if we just multiply these 65 shares by the 87 cents per share per quarter, we're going to get $56 in passive income every 3 months. Then totaling this up for the entire year, we end up getting $226 of passive income every single year from Bank of Nova Scotia. And calculating the average per month, it ends up being $18.85. Now, if we divide the annual dividend income of $226 by my investment cost basis of $4,500.39, we come up with a dividend yield on cost of 5%, which is actually excellent. And of course, this yield on cost will keep growing over time because the company continues to increase their dividends year over year. Meanwhile, my cost basis stays the same, so that's pretty great. Eventually, I hope to set this company up on a dividend reinvestment plan in my portfolio, or a DRIP. But right now it's just not possible because the amount of dividends that I'm making is less than the share price and it won't buy me fractional shares. So eventually I hope to set this up. Alrighty, ladies and gentlemen, getting into dividend stock number 2 in my portfolio, and that is the Canadian National Railway, ticker symbol CNR.TO. And now that I've showed you exactly how to calculate my yield on cost from the Bank of Nova Scotia stock, I'm just going to skip right to it in this one and all of the future stocks in my portfolio. So I currently own 15 shares in this company at an average cost basis of $1,692. Meanwhile, the company pays a quarterly dividend of 53 cents per share. Now, in total, the Canadian National Railway ends up paying me $32.25 per year, or $2.69 per month, which really isn't that much, but they do have a very high dividend growth rate, so I don't mind. And it should be mentioned that I didn't strictly buy this company for its dividend, but rather for capital appreciation as well, because it has been on a tear over the past decade. Alright, now the third dividend stock on the list here is a very popular one, and that is Johnson & Johnson Corporation, ticker symbol J&J. I own 10 shares in this company at a total average cost of $1,289.95. Meanwhile, the company pays a quarterly dividend of 95 cents per share. And something interesting to know about the company is that they have been increasing and paying their dividend since 1972. So that's way longer than I've been alive. Now, this company ends up paying me a total of $38 per year. And if we convert that to Canadian, it ends up being about $50 per year Canadian. Now, on a monthly basis, it only ends up being about $4 per month that I get from Johnson & Johnson. but I really love their dividend history and I feel safe owning this stock and making passive income from it for the long term. So overall, that ends up translating to a yield on cost of about 2.9%, which is about average. All right, jumping into dividend payer number 4, and that is McDonald's Corporation, ticker symbol McD. I only have a small position of 8 shares at an average cost of $1,520 in this stock, but it does pay a quarterly dividend of $1.25 per share. So the total passive income that I get from this ends up being about $40 US per year, or in Canadian, it's about $53. This is basically the same as my position in Johnson & Johnson, which is why the numbers are very similar, and my yield on cost is also similar at 2.6% in McDonald's Corporation. But overall, I hope to be able to build up my position in McDonald's because they have been paying dividends consistently and increasing them since 1976. A lot older than I am, so yeah, it would be a great company for dividend passive income. All right, guys, so the 5th dividend stock, which might surprise some of you, is the Microsoft Corporation, ticker symbol MSFT. Everyone thinks of Microsoft as a huge growth stock, just posting 40% returns every single year, which is true, but they do pay a dividend too, so I want to talk about that. I own 15 shares in this company at an average cost of $1,600 US, and they pay a quarterly dividend of 51 cents per share. This ends up translating to $30 US of passive income every single year, or on the Canadian side, about $40 Canadian. And as most of you probably would have guessed, this company does have a very low dividend yield, so my average yield on cost is only 1.9%. But it does increase fairly quickly, and so I love it as a dividend stock. All right, guys, getting back into a huge dividend payer in my portfolio, and that is the Royal Bank of Canada, ticker symbol RY.TO. And by the way, for my American viewers out there, you can purchase this stock. It's just not going to be on the Toronto Stock Exchange, so you will have that currency exchange. Anyways, getting into my position, I own 50 shares at an average cost of $4,936 Canadian. And this company actually pays a quarterly dividend of $1.05 per share. Now, the total passive income that I get from the Royal Bank of Canada every single year is 210 Canadian dollars, or on a monthly basis, that ends up being $17.50. As you might have guessed, my yield on cost is a lot higher for this one, since I am getting a lot more passive income, and that is a yield on cost of 4.3%. So just like the Bank of Nova Scotia, I'm predicting this yield on cost to go up over time to probably 4.5 or 4.6% within a few years. And that's because the company keeps increasing their dividends. All right, now another great dividend payer and one of my favorite companies in my portfolio is Suncor Energy, ticker symbol SU.TO. In this company, I own 40 shares at an average cost of 1,560 Canadian dollars, and they pay a quarterly dividend of 42 cents Canadian per share. This ends up giving me a total passive income stream of $67.20 per year, or on a monthly basis, that ends up being $5.60. So it really isn't a whole lot of passive income that I'm getting from this stock, but I do love the fact that it's a 4.3% yield on cost. So I just have to buy a little bit more in this stock and then get some more passive income. All right, now moving on to the second last dividend position in my portfolio, and that is Visa stock, ticker symbol V. I own 15 shares in this company at an average cost of $2,177 US, and they end up paying a quarterly dividend of 30 cents per share. Now, unfortunately, this is my lowest dividend payer in the stock portfolio, being only 18 US dollars per year that I'm getting, or 24 Canadian dollars. And if we calculate the yield on cost, that ends up being only 1.1%. But I do have to mention that I did not buy this stock for the dividend. I bought it mainly for capital appreciation. It's just that they do pay a dividend and it's kind of a bonus on top of the capital gains. However, I do believe that the company is increasing their dividend very quickly over time because they do have great earnings growth. So that's something to consider as well. All right, now finally, the last dividend payer of my portfolio is the iShares Core S&P500 Index ETF, ticker symbol XUS.TO, and the dividends are actually called distributions because it's an ETF. Now, I own 60 units of this ETF at an average cost of 2,954 Canadian dollars, and the quarterly distributions really aren't known because they're always changing based on all of the different companies in the S&P 500, so I can't give you an estimate for that. but let's jump into the yield on cost. So from the ETF fact sheet, I found that the past 12-month distribution yield was 1.69% or 1.7%, and that ends up translating to $50 of passive income per year. Alright guys, so if we total up all of these dividends in my portfolio, I end up making $750 Canadian in passive income every single year. And then averaging this out for every single month of the year, it ends up being an average of $62 per month, but that means that some months I'll have higher dividends or lower ones, like in the month where I get the Visa dividend, super low. But overall, it ends up being that average of 62. And so the total portfolio yield ends up being about 2.6%. So obviously this could be a lot higher, but some of my focus is on growth stocks like Facebook, which doesn't even pay a dividend, so that does contribute to my lower yield. Now definitely let me know in the comments section what your dividend portfolio yield is, because I'd be very interested to know. And that's it guys, if you did stick around until this point, let me know what you thought about these dividend stocks and my passive income streams, and how much you guys actually make every single month in passive income. Now if you do like any of these dividend companies, definitely do your own research, because I'm not a financial advisor and I don't want to be responsible for anyone losing money. So with that said, thank you guys so much for watching the video today. I really appreciate it. If you did enjoy or gained any value from this video, be sure to smash the like button for me to support my channel. And if you haven't already, definitely consider subscribing for more content on personal finance, business, and investing in the near future. And I'll see you guys next time.